Welcome to Rice TVX and the newest episode, the latest episode of the Rice Report. Today, I am joined by 20-plus year veteran trader, the master of technical analysis, Gareth Soloway. Make sure you smash that like button. It helps other people to find these videos and Rice TVX. Make sure you're also subscribed and subscribe to my new YouTube channel. I'll have links in the video description for Rice Against the Grain. Before we begin, a few quick messages from the sponsors of Rice TVX who make it possible for me to bring this content to you. Before we get into it, make sure you visit ricetvx.com and sign up for my mailing list so you never miss an update or new Rice TVX and Rice Against the Grain content. You will also find links to all of my various channels as well as my social media. Make sure you're following both of my YouTube channels, Rice TVX as well as Rice Against the Grain. And due to censorship, make sure you're following me on other alternative platforms such as Rumble and Odyssey, where I do post up exclusive content. If you want to support Rice TVX, be sure to check out and join my Patreon channel, where you will get early access to my videos with no ads, unedited. You will also get exclusive content and more. All right, ladies and gentlemen, I do have a playlist down below in the video description for all of Gareth's previous appearances, so be sure you're checking that out. I would also encourage you to make sure that you're following Gareth over on his Twitter account at Gareth Soloway. Make sure you're checking out inthemoneystocks.com as well as Verified Investing Crypto, which we'll be talking about towards the end of the video. But that is his verified trading. If you want to join and learn and shadow what Gareth is doing, check out both those websites. Follow him on Twitter. All the information is down below in the video description. Today is a big day, people. In case you don't know, the Federal Reserve, they just got done with their FOMC meeting. We have a 75 basis point increase on the rate hikes, and I'm going to get Mr. Soloway's opinion and thoughts on what's been going on today. What's going on, my friend? I can't hear you.
I was on mute. Look at that. You were. So I'm doing well, buddy. How are you doing?
I'm doing excellent, man. When I was asking to schedule you for this week, it just seems that I always get you at really good moments, and I appreciate you. I don't know if you just like leave these moments open for me or if it's just how time works out, but I appreciate because today is a really interesting day. I mean, we got the 75 basis point rate hike. The crypto markets seem to be kind of flat, but you said the stock markets are going crazy. What I want to ask you first, I haven't had a chance to fully listen to what Chairman Powell said, but what is the language that he's putting out for beyond today? Because the next FOMC is the 13th and 14th of December. Does it look like the Fed is going to remain hawkish? Is there any language of pivoting like people are expecting?
Yeah, so the initial statement was the 75 basis point hike, which we all expected, right? That was already priced into the market. The verbiage did change in the statement, and that was the key initially to why the markets took off to the upside. Basically, Jerome Powell said that they're going to take into account past rate hikes and how the lagging indicator or the lagging impact of it will affect the markets. And that was something new that wasn't in any past statements, which tells us that they are aware that these rate hikes that they've been hammering the market with take a while to be filtered through. So they don't want to overdo it and cause a collapse. Now, the S&P 500 just ripped higher. I don't know if we can show my screen here, but
certainly
we just ripped higher. I mean, you can see on that statement, just that alone. And then what's crazy is that
we're at 10-minute candles, right?
Yep, correct.
Okay.
10-minute candles. So this is intraday. So the initial reaction was one of huge emphasis and excitement. He's finally kind of toning it down. He's going to take care here. And then he came on the press conference and was still a little bit more on the hawkish side, maybe potentially still saying 50 basis points in December. And the markets didn't like that. And we've seen the markets come down very, very quickly. And what's crazy about this, right? I mean, it doesn't look super big, but these candles are massive. We're talking about, from this low here to this high, it's almost, it's basically 1.5% on the S&P. And then to down here, it's about 2%. So for the S&P, these are humongous moves. Maybe not in crypto, but for the S&P, it is humongous moves.
No, I mean, those are 10-minute candles. That's like, I was counting, it's like 7 candles. That's like 70 minutes. So like an hour and 10 minutes. So basically 2:00 p.m., which is right when everything was about to begin. We had the 2:30 meeting, and then, that's the press conference is what I wasn't able to fully listen to. I had to do a phone call in between finding out what the rate hike was and then doing today's live stream. So do you think that the crypto market is going to catch up, correlate, and follow what's going on with the stock markets?
Yeah, I mean, in general, it does to some extent. And what's interesting here is that we did see the initial pop on the Bitcoin chart, and we did see it come back in. But the one weird thing about crypto is it's been very muted in terms of the volatility, right? So we haven't seen, when the S&P's been dropping, 2-3% in a day, crypto's actually held up relatively well. And today, again, you could see crypto, I mean, basically from where the statement started, we're essentially flat. I mean, maybe even slightly positive here. We're starting to get a little bit of a bounce up. So it is interesting to see how the crypto market has almost been the calm market when you look at the currency markets, the stock market, the commodities market. It's actually been the chill market.
Do you think it's because people are actually starting to realize what cryptocurrency can do in a situation that we're dealing with as far as the macroeconomics globally?
Yeah, I think there's a small percentage of that. I also think that there's, because of the dollar's strength and the stress that it's been putting on the pound, the euro, the Japanese yen, I do think that there's a certain amount of investors in those countries that have said, hey, listen, let me maybe go into, Bitcoin as protection in this wilder currency Forex market. And then I think bottom line is there's this weird calm in the Bitcoin and the crypto market, as everyone's waiting for the judge's decision on Ripple, right, is coming up later this month, I think. And then also just any sort of regulation from Gary Gensler. And I think that once the midterms are over, that's where you could see that kind of clarification on the crypto market. So I think it's a combination of a lot of things that are keeping it a little bit more sideways choppiness right now.
Yeah, no, I agree. I mean, it's like we're dealing with a lot of things in a lot of different areas, which when you add them all up and stack them together, it's just a multitude of things. So it's intense. And when we saw the British pound kind of start to have a plummet, we've seen an increase of trade in Bitcoin. So that was really interesting to see where people are actually taking cryptocurrency seriously. Was there any language from the Fed about basically how the rate hikes are affecting other nations? Because I would directly say that what Great Britain experienced with the pound was a direct result of what the dollar's been doing with the rate hikes. Would you agree with that?
So in the statement itself, there wasn't, but it's very possible he does the Q&A at the press conference, and I think that would be a very normal. And I hope one of the interviewees, the reporters, does ask that question, because to me, that's one of the more important reasons for the Fed to kind of stop hiking, is that if they hike too much more, the dollar is going to strengthen. And at some point you will see a catastrophic credit collapse, a money collapse in some of these other countries.
No, I agree. That's why the UN put out that warning to the Federal Reserve and central banks. And I was really curious as how seriously the Federal Reserve is going to take that warning versus what we're doing in our own country. I mentioned something when we were on Around the Blockchain the other day about something that Gregory Mannarino said about it. The Fed was really serious about fighting inflation. One, you would have to raise the interest rates above inflation, which you've agreed. We talked about that on. But do you think that the idea of having an actual reserve requirement for the banks, where the banks have to pull in cash from the public, would be a deflationary event and help us with what we're dealing with the inflation?
Yeah, there's no doubt. I mean, anytime you end up making the banks hold on to more money and not able to lend it out, that will have the impact of meaning less money in the system, which inevitably would bring down inflation. I think the Fed is trying to do it from the opposite side, right? By raising interest rates so much, essentially it's making the consumer. So you're talking from the banking side, but by raising interest rates, you're making the consumer basically say, I can't afford a mortgage payment with 7% interest or 7.5% interest. And so it kind of works in that side of the equation. But I agree that you could tackle it on that side. Absolutely.
Okay. All right, man. Well, I'm pretty sure people are wanting to know what's going on specifically in the charts. And you want me to shut up and quit asking questions. So when we're talking about Bitcoin, what are we looking at for the remainder of the year? Are you still looking at some upside up to the 25.5 price range still?
Yeah, so I still think that we have some upside. And again, we still have this beautiful bullish channel or pattern forming right here. We broke out of this little wedge pattern down here. So I do think that Bitcoin is kind of coiled here to make a move up. Now, whether it goes to 22.5, which would be this upsloping kind of channel line here, well, that's 25, right? Or to 22.5, which is right here. That's the question. And I don't know how much fuel is in the tank on Bitcoin. I think a lot is going to have to do with, what the Fed ends up doing. How does the dollar react? If we actually see the dollar starting to weaken, then that's very, very bullish for cryptocurrency and specifically Bitcoin.
Okay. No, it definitely makes a lot of sense, especially at the Fed. I think the language is looking at the Fed is going to pivot, because when the Fed pivots I think it's off to the races.
Yeah.
And I guess going back and listening to the language of the Q&A and what he said in the press conference will give us maybe an indication of where we're headed in mid-December. A lot of people are speculating like a 50 basis points and then maybe dropping off and seeing how things catch up, especially with what's going on internationally. So it's really crazy.
And I think a couple things that are worth noting here is, so initially when the Fed changed their verbiage in the statement, we saw the dollar collapse really quickly. And then during the press conference, we've seen the dollar roar back. And what's interesting here is that the market had pointed expectations before this meeting. And basically we're saying we expect by a certain point in 2023 to have a Fed funds rate of 5%. And essentially we're still at that point, right? We're still at this, we're basically trading where the dollar was prior, which tells us that, again, the market, even after this whipsaw, we're kind of back to where we started, where the Fed hasn't pivoted enough to create the dollar to weaken significantly. And again, we're seeing the rally back that's telling us that. So again, I think that's the key takeaway, at least as of now. The dollar's not weakening. So in other words, the Fed is still remaining pretty hawkish here.
Yeah, which was, I think, the expectation by a lot of people. I mean, from what I'm gathering, a lot of people are thinking that we're going to see a pivot maybe early 2023, that they're going to stay hawkish and remain. And even a 50 basis point rate hike next month would still be hawkish considering what's happening internationally, because again, the UN's warning not to raise interest rates and we're raising interest rates. So
yeah.
Now, is this the same chart as the DXY basically?
Yeah, this is the 10-minute DXY chart, right? Exactly. So we can see that again, when the Fed came out, the DXY on the 10-minute chart collapsed, then ripped up here. And that's when the market and Bitcoin reversed their moves, right? As soon as the dollar started to gain that traction, we saw Bitcoin reversing.
It's so seesaw.
It is.
I mean, that's why I like to pay attention to what's happening to the dollar, because like you just mentioned, when the dollar is up and strong, the other markets weight against it are definitely going to be down. Crypto, your commodities, stock market, which is where we're at. So I wanted to get your thoughts on you mentioned Bitcoin. Can we talk about Ethereum and then XRP?
Yeah, let's take a look for sure. And look at the whips on Ethereum after that too. I mean, just crazy price action. But let's go to the daily chart.
It's funny how all these 10-minute wicks are paralleling each other in the size of the wicks.
Yep. And what that tells you, honestly, what it tells us is that the crypto markets, as well as commodities, currencies, everything, the Fed is controlling it all. I mean, it's almost like the market isn't even a market anymore. It's just a market that's trading based on what the Fed does.
Well, I think that it is, because I mean, we're at such a point. It's like you without really understanding what the people who control the situation are going to do, you don't know how to react.
Right. So true.
especially when you're looking at all the factors. Because I mean, at any moment, Gareth, I know you're probably really well aware of this. We could have a black swan just creep out of nowhere, and everything that we're going to talk about today and have talked about just kind of goes straight down the shitter when it really comes down to it. And we can't control those things. And we're at such a time period with so many different things that a black swan, I feel, is it's inevitable.
Yeah. No, I agree. At some point, I mean, whether it's something that breaks because of the strength in the dollar and what the Fed's doing, whether it's something geopolitical, it's inevitable that we will have it. I mean, we saw it with COVID when COVID emerged and the markets collapsed. Something will happen. And the biggest scary thing here is that everything that this market does, and we're talking all asset classes, is relying on the Fed. We've become basically attached like a drug dealer with a drug addict, right? And the Fed is the drug dealer and the markets are the drug addict. And without the Fed, you see what the asset prices are doing. They're collapsing. With the Fed, the high can go on.
That is one of the best way of putting it, and I hadn't really thought about it that way. But yeah, it's the Federal Reserve is our drug dealer, and we're a bunch of junkies just lingering, waiting for another hit. It's crazy.
Yep,
So with Ethereum, what price target are you? If you know, obviously when the crypto markets correlate each other, so if Bitcoin is going to hit possibly up in the 25.5 range that you're talking, what are you thinking about with Ethereum if it continues that momentum?
Yeah, so one of the cool things on Ethereum here is that we're actually making a same sort of bullish pattern, but we're right below this resistance here. So the key is if we can make a good enough resistance kind of or consolidation pattern and you pop and you get through that line, you actually have good upside to maybe 2000. And I think it's very possible that if Bitcoin goes to 25 or so, at least you see 2000 on Ethereum. In the near term. So I think, again, that would be kind of the target. There's even a small chance 2300 could be seen, which would be this kind of major pivot area right in here. So again, those are the two levels I'm watching. But number one, we got to break through this downsloping resistance level.
Okay. Now, do you see, obviously, I mean, you're seeing more upside action on the short term than downside action, correct?
Yeah, right now I am. Although, I have to, as a trader, every time the Fed comes out with anything, we got to kind of reevaluate. Right now, the charts are still holding true, but if the dollar starts to rip too much more here, and you can see the dollar's now making short-term highs here, we're almost taking out the highs from before the Fed. In fact, we are. I mean, if the dollar really continues to strengthen, let's say for the next 2 weeks, then the crypto market has no shot, of making a breakout. So it really becomes really influential on this in terms of what the market is doing and what the Fed is causing in the dollar. And this is, I mean, I'm going to look at the S&P, but I've got to imagine the S&P is getting crushed. Yep, S&P now down over 1% on the day.
Okay.
And let's see if Bitcoin is selling as well here, but I would assume it is.
Yeah, I mean, there should be, there's obviously going to be that correlation. That's intense.
But again, I mean, Bitcoin, I got to say, it's holding strong. I mean, considering it's still kind of right around those levels from where it started earlier in the day. It's just been going sideways. So, it seems like Bitcoin doesn't get a huge move up when the Fed was positive or when the markets reacted. But at the same time, it's not getting hit too badly here either on the way down, although it's starting to inch a little bit more.
Right, and it's still early, and I think we still need to decipher the language of what was said completely in the meeting and the Q&A, which obviously we both haven't had 100% chance to do. So, I guess before we get into XRP, the ultimate question I want to ask you when it comes to Bitcoin, crypto, the S&P, this is traditional markets, do you feel as if the bottom is in, or do you feel as if we still have more pain to go?
Yeah, so I really do think that there's still more pain. I don't even,
I'm in that agreement. I'm in that. I just wanted to see where your head was at.
Yeah, I mean, some of the things that kind of make me aware of this is that number one, we haven't seen like you haven't really seen pain yet. We haven't seen people throwing in the towel saying Bitcoin's over. And in all the past cycles where we've had the bearish move, we've seen that happen. In addition, this is the first cycle where the Fed's not printing money, right? So here, I think Bitcoin's only down about 70 or 75%. All past cycles where they've been printing money, it went down 85%. So who are we to say that now the one time where it should go down even more, it's not even going to go down 80 to 85%. So for me, everything kind of aligns that we should see a move to the downside. But I mean,
We
the
can't
thing
really
is, when we
target
get
when,
regulation,
obviously.
it could change.
Yeah, as I say, you really can't say when. That's
Right.
why I was just curious if on the short term, if you've seen more upside versus downside, whereas in the long term, I see more downside. Again,
Yep.
looking for people to have good options for exit points if
Right.
they're trying to take that kind of information. And again, they can kind of get this kind of information by specifically with crypto by checking out your website and joining the verifiedinvestingcrypto.com. And then on the stock side, the traditional market side, in the moneystocks.com, which again are down below in the video description. I'll put them in the pinned comment as well. So we're going to move to XRP, and I want to, while you're pulling up the chart, I want to mention, you said that the case should be over. The library case should have already been over,
Right.
and it's not over. They keep, for whatever reason, delaying a decision. I think that looking at the library Twitter account last night, I believe the transcript from the last hearing was released. I would encourage people, because I'm going to be diving into it, to read it, because I feel as that the library case has a lot to do with what's going to happen with the XRP case. Especially if they feel they have a better case with the library case, because that will then set a precedence potentially for the XRP case in addition.
Yep.
So, yeah, I'm curious what your thoughts are, where we're at with the XRP market.
Yeah, I mean, XRP, again, it had this beautiful breakout, and I love these really big wedges that stretch back for literally a couple years almost now, because when they do break out, that's usually a pretty good positive. And you have seen that it had a nice pop, and now it's forming almost like another little mini wedge pattern. In fact, what we could do probably is even erase this trend line here and create that wedge pattern a little bit more accurately. Let's see if we can do that. So, I mean, you could even make a case you're now creating this type of thing here. And so this, as of now, is a flag pattern. You can see the pattern of the wedge looks like a flag from this flagpole. And so
Right.
that would be bullish at this point. Now, the only thing that would change my mind on that is if this trend line breaks. If you break this trend line around 42 cents, 43 cents, then that's a failed bullish pattern. And you'd have to be really nervous that you're going to see a bigger drop on Ripple. But right now, the pattern is bullish. It really is.
Okay. So, I mean, what I would be assuming is that if we've seen a situation where there was a decision in favor of XRP, regardless of what the market says, what kind of patterns we're in, we're more than likely going to be off to the races, at least on the short term with XRP. Would you think that would be a correct statement?
Yeah, I think so. I think Ripple would have upside. If you see Bitcoin go up and the rest of the crypto market go up, absolutely. And then again, we just have to find out what the regulatory stuff kind of comes out as and gives us clarity on that. But I think so. I do think so. Yep.
Okay. Do you mind really quickly? I think somebody was asking about ADA, ADA. Do you mind
Yeah,
looking at
sure.
Cardano
Cardano.
really
Yeah, let's
quickly?
take a look at Cardano here.
And then I'd like to touch on gold and silver, and then get your thoughts on some oil. I want to talk kind of more specifically with the diesel situation.
Yeah, so right now Cardano, it ran into a wall right here, right? I mean, these are all these pivot lows right here, and you can see price hit it here, pulled back, tried to pierce here. You have the down sloping trend line. Now it's kind of rolling over a little bit. So for me, you have to be very careful on Cardano unless it can get through this level. So I would say the range of the level is 42 to 44 cents. You need price to trade and hold above that, and then you get a breakout. But that's the one thing you got to respect that level. I mean, you could see how it hit it here and here and here, and it just couldn't get through this area. And that's telling us there's resistance there to just monitor and be careful on.
Okay, awesome. And I appreciate you sharing that, because I know there's a big, huge Cardano community. I'm definitely a fan of Cardano, and I was curious where we're looking in comparison with the other cryptocurrencies in the market. So how are you
Nice.
feeling? How are you feeling about the precious metals area?
I still like the precious metals quite a bit. I'm still a fan. It definitely gets hurt by a
How has
strong
gold
dollar, just
reacted
like.
so far?
Yeah, look at this drop on gold, by the way. Holy cow, gold's getting smoked right now. But I still continue to be bullish. I think that the Fed again is at a point where they can't, and this is my thesis for why I'm bullish on metals and Bitcoin partially, not just the charts, but it's basically that we're in a scenario where you have the Fed saying we understand that the dollar, yen, the euro, the pound are at breaking points against the dollar. And therefore, we have to be very careful not to let the dollar strengthen too much. So, to me, that if you see the dollar up for the next week or two, you're going to see a global catastrophic collapse potentially in the charts. And that puts us at risk of a bigger kind of contagion aspect. And I think that is something that the Fed, if they're not aware of that, they're doing a huge disservice to the overall market.
I think they've got to be aware of it, and they've got to be aware they're skating a really fine line. And this kind of goes into, I say it a lot, and the more I see these actions take place, the saying that I've heard, the strength of the dollar is going to be the death of the dollar, makes so much sense. Because I mean, from a global perspective, if we're affecting the rest of the world in any capacity, like what has happened just with Great Britain, for example, we're going to make a lot of enemies.
Oh, I mean, that's the ultimate downfall, right? Is that if you piss off enough of these big countries and they say, oh, they're not worried about us, we're going to start taking care of ourselves and not thinking globally, that's when the whole system starts crashing down. And that's a huge risk. Absolutely.
Yeah, and that's what I'm saying. We're in like a really sticky situation. That's where it's kind of like I see what the Fed is trying to do.
Right.
But it's hurting the rest of the world. And what we as Americans are going to have to deal with is higher inflation in return for trying to save the rest of the world. Because this whole fiat money scam is starting to come and crumble, and they got to try to figure out ways to keep it going. And they're introducing these CBDCs, and they think that's going to help them to get a better handle on all this shite. And it's crazy, man.
And the thing is, like, as a citizen, whatever country you're in, we don't realize, or maybe we don't grasp fully how crazy things could potentially get. But you have collapses in currencies of major. I mean, it's one thing to have a small country in the middle of nowhere have 300% inflation a year, or whatever it may be, and their currency collapses. But you have major countries with those aspects that can, I mean, we could see a global depression. And then what do we know that leads to? Unrest leads to military stuff. And I mean, you could be talking about a horrendous scenario. So, I mean, it's scary to think about it, not fun to think about, but you got to think about it.
Yeah, I feel like there has to be some realism put into the conversation instead of just trying to let people like hear what you think they want you to say. You just need to let people know the reality of the situation, because it ultimately is not pretty. I can't say the guy's name correctly, but Chamath, the guy that used to be involved in Facebook and has that. Yeah. So he came out recently talking about thinking that we had seen a bottom because the FANG stocks had took a big hit. Said that was an indicator for the stock markets, because the FANG stocks hold about roughly normally 25%. I think is what he said. Maybe it was 75%. I can't remember the figures, but what are your thoughts on what he said? And it just kind of came up based off somebody asking about Meta. What are your thoughts about what that statement about the bottom being in because of the FANG stocks took such a big hit?
Yeah, I mean, I being through past bear markets, and we're talking the .com collapse and other things, they've taken some big hits, but they haven't taken the hits that you've seen in past cycles, right? I mean, think about the banks in 2008 and 9. Think about the .coms like Amazon back in 99, 2000, dropping 95%. And so for me, just that experience alone, I would be shocked if we've really reached a bottom. And part of it is, I mean, think about this. The markets are pricing in I would say right now we're pricing in a minor recession, like run-of-your-mill minor recession. The Fed just raised the Fed funds rate from 0.25% to 4% now. What is that? I mean, like, was that like 1,000% move? I don't even know how many thousands of percents that is of a hike. But how are we just going to see a minor recession? I don't know.
No, that's why I've mentioned to you before. It's depression. It's not
right.
It's not. We're out of recession realm. We're going into depression realm. I mean, when you look at the bigger picture and everything that's happening.
So to me, I'm in the camp where it's like I'd be so shocked if, I mean, and think about this, the consumer is still spending. I mean, granted, we had some money saved up over COVID and so forth, but at some point, if things get bad enough and the jobs market gets bad enough, you're going to see this kind of collapse in the overall system. And the consumer, once the consumer stops spending and is in shock, that's where you see earnings get revised down dramatically. And again, whether or not Bitcoin bottoms out, I still have it priced in to go lower because it's still kind of a risk asset. But I do think in this next cycle, this bear cycle, that's where it will make the pivot to becoming a safety asset versus a risk asset.
No, I would agree, especially if we're seeing more failing fiat currencies around the world. People are going to want to find a way to be able to preserve what they have, and there is a limit to capacity to gold and silver, and a lot of people are thinking of Bitcoin as being gold 2.0, even though it was technically supposed to be a peer-to-peer cash system. That's another discussion for another day. But do you see how do you see silver performing versus gold right now?
Yeah, so I think for silver's again always the one that's a little trickier to gauge. It's still in this kind of wedge pattern here. If it breaks this level around 1840, then I think you get another dump on silver, potentially down to this longer trend line. Let me zoom out on my chart so we can take a look. So there's this longer trend line here that's around 1550 or so. So that would be my one concern, that if it does break that 1840 level, you could have that dump. And remember that the reasoning for silver going down, even in a risk off environment versus gold maybe holding up better, is that it's an industrial metal as well. So that's why there's a little bit less clarity on the price action. If you ask me where silver is in 3 years, I think it's way higher than here. Over the next year, it's a really tricky gauge.
Yeah, I mean, there's obviously a lot of manipulation going on with the paper contract trading and stuff. I would love to see some of the individuals that are trading on COMEX cash in and go get their physical and just collapse that mofo.
Yeah.
So that we can actually see silver perform and gold perform as they're supposed to, because I really feel that they're being kept down. Because an indication of a higher gold or silver price is an indication of a failing fiat currency.
Right.
And obviously they don't want that right now. There's enough things to make the dollar and other fiat currencies look bad. They don't need gold and silver going to the moon right now.
Yeah. Yeah. No, I agree. I mean, I think that in this environment, they don't even have to worry about the dollar because we're still the cleanest shirt on the of a dirty hamper full of shirts. And globally, we're still the predominant as the US dollar. It's still the place people want to go for safety. Now, eventually that changes, but right now it's still the case. Now you can see starting, so you're seeing China getting like eerie about, kind of saying, all right, we're going to look to do other things. Obviously Russia's looking there as well. And so you're starting to see this. And I think this is one of the big detriments of having a strong dollar policy, is that you're going to make other countries look for alternatives.
Right, which is almost an advertising campaign for crypto in and of itself. So it's like the banking system is doing a really good job at helping people to lose trust in the system. And I think people more and more are going to be in that position. Jorge Contreras gave me a $10 super chat, which I want to thank him for. He says, Gareth, the man, the myth, the man, the legend. What are your entry and exit points for Meta, and what will happen to Meta if the dollar keeps increasing? It looks like a good buy.
So number one, Meta's getting punished today now. It was already down on the day. But one of the things that I'm keeping an eye on is this channel, right? So we have a nice channel here, and we're right around the low end of that. In addition, you have a key level here. Let me just go to the chart. If you go to your weekly, I think you can see it on the weekly. There's this kind of flatlining area where Meta was just going sideways before it began this trek to the upside that we basically saw from 2015. So I would say anywhere between this 90 level and 87 is going to be the likely bottom. I'm not really in the camp where that if the dollar continues to strengthen, Meta can't do well. I think it's now become a total trade on the metaverse and people thinking that Zuckerberg is just throwing money away. And if there's any sort of light at the end of that tunnel, Meta should be valued probably at $150 a share. So it's just a matter of clarity, right? It's not so much a dollar trade as just at this point, it's all on Zuck. He's gotta either put up or shut up,
Now, not that I really want you to look at each chart individually, but are the other FANG stocks performing similar to how Meta's performing?
Yeah, number one, number one, Apple has held up amazingly well. You can see here, comparatively, it's a much different chart than Meta. Meta's like way down in the dumps. This is still holding up. On Apple, the one thing that as an investor, if you're long Apple, you don't want to happen and you probably want to exit is if Apple breaks like 136 here, this trend line, this long-term trend line, if that breaks, you're likely headed down here to about like, you could go as low as $82 on Apple, which would be a huge drop. And by the way, if Apple ever goes to 82 bucks, the stock market is literally down 50% from where we are now. I mean, that would be catastrophic because of how big Apple is for the market. But looking at like stocks like Amazon here,
but a black swan could obviously take that out.
Oh yeah, for sure, for sure. But you can see Apple, Amazon's really started to correct here. It's still not as down as much as Meta, but the next big level on Amazon, it'll be around, I would say around $81 to $82 right in here. A lot of support. And then Google's had a big drop too. I mean, Alphabet, look at this drop on Alphabet from the all-time highs. It's basically down from 150 now to 87 and change. And, you know, you'll see some support around 76. 76 gives you some major, major support there.
Okay. Now, looking at what you just showed, I mean, I feel as if just looking at those charts and seeing where we are in a situation that we definitely have a lot more downside to go. I don't spend a lot of time looking at these charts specifically, and that's why I enjoy having you on. And I do want to be respectful of your time as well. Do you mind kind of going over the crude situation and diesel? Because I know that with what's happening in Europe, with the Saudis reducing the supply of what's being released as far as their oil, our special reserves and all the different situations. And I'm trying to look into the diesel situation a lot more, but because I think we're down to around today being the second. I think they're saying about 14 or 15 days left of diesel, and that's going to affect a lot of things, and it's not getting covered in the mainstream news, but I figured the charts would reflect something.
Yeah, I'm trying to find a good chart on diesel here.
I don't even know how to determine it because it's now. I mean, I've heard these situations we've been in similar situations in the past. 2019, maybe even in 2020. I think in 2020 we had an excess because of lack of people being on the road, but we just haven't been in this kind of situation with everything that else is happening. I think the Russia-Ukraine situation, what's happening with the Saudis, all of this is affecting the diesel situation, which doesn't come from crude. I think it comes from fossil fuels.
Yeah, no, you're right. And I think a couple things. Number one, I still think overall, as long as the Fed is hiking rates, the economy is going to continue to slow, and the global economy will slow as well. So you should see an alleviation of the supply constraints on diesel, in my opinion, because the global economy is going to slow. And we saw this kind of with natural gas, right? I mean, natural gas, there was so much panic about it, and before you know it, natural gas has collapsed. Same thing with oil. I mean, if we go to the oil chart and we zoom out to a bigger time frame like the monthly, you know, we were hovering at 130 and everyone was like, oh, it's going to be at $200 a barrel. And then it came right back in. So for the most part, you know, I'm not a big believer in these scarcity scare tactics. I feel like a lot of it's partially probably funds that want to jack up the price in the near term and then sell into these, you know, average buyers. But then part of it is the media picks up on these stories too, and then just runs with it and makes it scarier than it really is. Weirdly enough, the economy has a weird way of mitigating these type of situations in most cases, right? And that's partially by, you know, when price of natural gas skyrockets, people use less natural gas, right? And you see this natural kind of, you know, pullback from consumers of using it.
Okay. That makes sense. I mean, it's something I've got to look a little bit more into. I mean, I don't feel like the mainstream news is covering it quite well, and there's not enough good resources of information out there for me to determine right now what's going on. But again, man, I always appreciate your time. I always appreciate you taking the time to come on and explain the charts and let me ask you questions, because you're one of the few people that I think gets me and understands the kind of questions I want to kind of get gauge the answers for. And again, I really respect what you do. I want to encourage people to make sure that they're checking out your Twitter account. at Gareth Soloway. Again, this is all going to be linked down below, but you want to take a moment real quick to share what it is you do over at Verified Investing Crypto and In the Money Stocks?
Yeah, sure. So basically just their websites where I have services, and inside the service I do a daily video with hardcore technicals. I would say 95% technicals, and then with a kind of a mix of psychology, market psychology, understanding the macro. And then I basically put out trade signals whenever I see a good trade signal set up, and it goes out via an alert. And that goes for stocks at In the Money Stocks, as well as crypto at Verified Investing Crypto.
And one of the things that I always got to remind people that I like about what you're doing with both websites, one with the traditional finance side and then one with the crypto side, is that you're completely transparent with your trades, with your gains and your losses, which you have a hell of a lot more gains than you do losses. For the crypto fans, they can see right here with the verified trades that are given to members if you're interested in joining up and signing up for either one and or both. So thanks again, man. I really appreciate your time. Do you have anything that you want to add before we do wrap up today's video?
No, just I think just keep in mind that as much as we don't want to admit it, right now the Fed is in control via what they're going to do, and that affects the dollar, which then basically inversely affects most asset prices. So just be aware that right now, keep an eye on the US dollar. That's the #1 chart for all assets, for crypto, for stocks, that I'm keeping an eye on a daily basis. When the dollar starts to fall, we will see a big move up in crypto. And you'll see, again, I think it's sooner than later. But again, so far today, it's not looking promising.
No, I agree. I want to be looking forward to seeing what the GDP information is, what we're looking for CPI numbers in December, and then try to get you scheduled somewhere around the 14th, which will be the day that they release the next FOMC meeting and what they do with the rate hikes. So, yeah, again, everything we talk about is going to be linked down below. Gareth, if you could bear with me just one moment, just going to wrap up your recording or wrap up the live stream. And then I need to holler at you one quick second.
Perfect.
So, ladies and gentlemen, thank you again for tuning in. I greatly appreciate it. Make sure you check out the playlist with all of Gareth's previous appearances. This is actually number 7. So there is a playlist down below. Make sure you're checking out what Gareth is doing at inthemoneystocks.com and Verified Investing Crypto. And be sure to follow him on his Twitter account. Make sure you're subscribed to my new sister channel, where you will find what was formerly known as the Stranger Than Fiction content over on Rice Against the Grain. Links are down below for everything we talked about on today's show. Make sure you smash that like button if you have not already. And I will leave you with this. I encourage you to be a blessing to others. Treat people how you want to be treated. Be the change you want to see in the matrix, the change you want to see in the world. Practice change.